Good afternoon and welcome to Ghana's leading business analysis show, Beyond the Numbers. Now, the Bank of Ghana is set to inject $1 billion Ghana cedis, $1 billion cedis, $1 billion actually, I should say, into the foreign exchange market in August 2026 as part of efforts to improve dollar liquidity and support stability in the forex market. The move comes at a time when businesses and consumers continue to watch closely the direction of the cedi and the cost of imports. So, what exactly is driving this intervention, and what does it mean for the exchange rate, businesses, and the bigger economy as a whole? Today, we go beyond the headlines to examine the numbers behind the Bank of Ghana's latest forex move and what it could mean for the market. I'm Akufo-Addo, and in the studio, I'm joined by Isaac Kofi, head of our research desk, and on Zoom by Caleb Ziblim. Caleb, Kofi, are we good?
Yes, we're good.
It's a big conversation. Call it forex intermediation. $1 billion. That is the big number when it comes to what the Bank of Ghana wants to do with the economy. Kofi, significant, what we want to do in August.
Yeah, in fact, if you look at the latest reports released by the Bank of Ghana, what you see is that this is within the average that the bank has doing since the last 1 year or 12 months. And I know Caleb will speak extensively about that. But the Bank of Ghana or the IMF has revealed that if you look at between May of 2025 and May of 2026, the Bank of Ghana has injected close to about $12.9 billion into the economy to save the cedi. And if you do the math, that's about a little over $1 billion each month, right? So this is within that, the band that the Bank of Ghana has been doing since Mohammed's second stanza. But if you look at what they announced in July and in June, what you see is that this is a little below that, mark. It's about $400 million less. So you need to ask yourself, is it that the demand has reduced or Bank of Ghana has different strategies under their sleeves? Because we all know, if you look at the trajectory of Ghana's, currency, or in terms of the forex demand, usually the third quarter is what we call the bane, or the quarter that usually has a big demand, right? Where almost everybody is importing ahead of Christmas. And in fact, if you look at some of the the big multinationals who have, released their first half.
All of that.
Exactly. So all of these ones feeding into the function when it talks about the demand function for forex. So you would expect that the Bank of Ghana should be announcing a bigger, figure in terms of the intervention. But this time around it's going $1 billion. But if you look at the IMF's, assessment of the intervention so far, one thing stood out. And that was that if you also look at what the Bank of Ghana announces that they're going to intervene, usually it's a bit different from what they actually do.
Yeah.
So published auction or guideline versus what is actually auction, we see some discrepancies and variances in there. So we simply do not know if there is some money somewhere that the Bank of Ghana feels that when possibly the demand gets out of hand, they will come in to support. But the last time I made mention that, well, if you look at the kind of strategy that the Bank of Ghana has put in place and the fact that they are very, very particular about the system and how things work, in itself is also an intervention on its own. So possibly they might not need to come into the market with about $2 billion every month, but $1 billion plus some market sensitization and clean up the space to make sure that speculation doesn't drive also is a form of intervention. So this $1 billion, Kweku, I would say is within the average that they've been doing in the last 12 months.
Yeah, I mean, and Caleb, you also been looking at the numbers, and $1 billion in August, the cedi is facing pressures. Today I looked up the Bank of Ghana's social media handles, and they were doing around 11.5, 11.6, 11.7 within that band in terms of where we are currently. I mean, is that a cedi weakening enough? And if you look at $1 billion, what kind of impact will it make? Kofi has, dovetailed into how crucial this is, and in particular how it is within the band of what the Bank of Ghana has been doing since the start of the year, and in general, since John Dramani Mahama assumed office. What is your own reading of the situation?
So like you mentioned, the cedi is currently trading as one of its weakest levels in the past year. So since the NDC took over government in 2025, this one of the weakest the cedi has performed. Currently, we are doing 11.7. If you check Bloomberg and Google Finance, we are doing about 11.7 billion. 11.7 cedis. So $1 gets you 11.7 Ghana cedi. So, and that's one of the weakest we've seen so far. And then we've already spoken so extensively about what's really causing this recent weakening of the cedi. The conflict in the Middle East is one of them. Also higher energy costs, and also because of some of the panic within the financial sector, where some businesses are deciding to import their goods now and deferring it to a later date because they are really scared about supply chains availability and all of that. So that's really the main reason why we are seeing this. And then if Kofi spoke about the average, if we go through the trend, the BOG is now operating on a revised forex intermediation policy that was introduced somewhere in September 2025 with support from the IMF. If you look at the data, the average on every month is about $1 billion. But then in June, we saw the highest ever at $2 billion. So in June, we saw $2 billion. And look at the trend of the strength of the currency, you see that before the 2 billion intervention, the cedi weakened to about 11.8. Now that's the highest we've seen so far. After the 2 billion intervention, that was in late June to early July, the cedi strengthened from 11.8 down to 11. That was one of the significant appreciation of the cedi we've seen in recent months and in the past year as well. So we saw the drop from 11.8 down all the way to 11 after the 2 billion intervention in June. Then in July, we are seeing further weakening again. And also, if you look at the data and how some of these things usually move, we also saw there was a debt repayments in July, in early July. So sometimes the bank and the BOG's intermediation coincides with when the Ministry of Finance also has to pay some debts, and that could explain why the BOG decided to come with 2 billion in June of 2026. But in July, the intervention dropped to 1 billion, and now in August, the BOG said that going to do another billion. Again, if you look at the BOG's reserve, the reserves are still in a very comfortable position. We are still in about 12 billion. However, the reserve position dropped from about 14.1 thereabouts to now 12.6 thereabouts. And if you do the math, that's about 1.2 billion reduction in Ghana's reserves, international reserves. Now, this is mainly because of the debt repayments we did, about 700 billion, as well as the increased energy costs. But then from the BOG, they say they are still very strong with their reserve position, and with the market should not panic at all. And which is why I keep hearing from the BOG trying to calm the market that we have enough fire muscle to quench any fire that happens within the FXP. So they should not be worried at all. And Kofi also spoke about some of the risk or the issue that was flagged in the latest IMF reports. And if you look at the report, the interesting thing is that, and people have not really noticed this yet, is that the BOG has not, so the BOG auctions the dollars. So the BOG doesn't set a price for the dollar itself to the commercial banks and the market players. The auction sets, and they usually, when you auction, it depends on the bids you get, and then the most bids you get or the highest bid you get, that's what the BOG should give out to the markets. But according to the IMF, when you look at the data over the past year, the BOG has deviated from that. So usually, instead of giving markets the highest bid, they usually want to stay in the middle or the lowest bid, which means that the BOG is trying to force the value of the cedi to a certain level instead of letting the free market forces determine the value of the cedi. Because once people are happy to buy the cedi at say 12 Ghana cedis, if the market players are offering to give the BOG 12 cedis for the dollar, that naturally should push up the price of the dollar. But the BOG is consistently rejecting some of these higher bids according to the latest IMF report. So these are some of the dynamics that we need to look at going forward. But then again, from the BOG, like I said, because gold prices are already doing very well, the reserve position is also one of at all-time highs, about over 5 months of imports cover. I think if the BOG really wants to intervene in the market, they can intervene in the market. But then again, the cedi is still performing weakly, and this has also translated into the high fuel prices we are seeing at the pumps now. These all almost reached 20 Ghana cedis, and that was mainly on the back of the value of the currency. Because if you look at the trend of this past year, we are currently doing the highest or the weakest the cedi has ever been since January 2026. So the cedi is performing at its baddest or at its worst level, since January 2026, and this is why we are seeing high fuel prices at the pumps.
Yeah.
But then again, the conflict in the Middle East seems to be easing a bit. Crude oil prices are coming down a bit, and that usually translates into lower refined petroleum products that Ghana then imports. So we should see some easing going forward. But then again, this really depends on what happens in the Middle East and how the U.S. President Donald Trump decides to take things to the next level if we can predict him anymore.
Kofi, there's a point that Zibli makes that I think is very interesting, the reserve position.
Yeah.
The Bank of Ghana consistently making the point that they are good. In fact, we are looking around 5 months as we speak of import cover. The gun wrap that is being implemented could take it several months of import cover if you look at what the finance ministry is doing. So if you look at the data, you would say that the Bank of Ghana is okay injecting in $1 billion or an average of that every other month. But also I want you to zoom in or zero in on the fuel, which has become such a major indicator. Because I remember discussing this with Adam at some point.
Yeah.
We was talking about usually all things being equal, a liter of petrol or a fuel is selling just around the exchange rate.
Yeah.
But now it's not like that because of the external condition, but also the cedi itself weakening. I want you to box those two in and tell me how significant this particular phase of the auction is.
I think that one thing that we need to put across is the fact that now we have data in the space. So economic agents are able to make decisions with data or available data, and how the Bank of Ghana, we should say, have been very, very transparent with their dealings. They announce their auctions, even with monetary policy decisions. Now we know what decision each policy member took, right? So that in itself is a good information for the market. And before I even come to that, I'll say that the market had information from the templates we put out last year. Last year, the market got to know that if you look at June, May, June was a period that the cedi appreciated the most, cumulative about 40% to the dollar. So instead of the market waiting for August, September to do the imports ahead of Christmas, they rather did the imports in May, June, and July. So that's why the BOG had to come in with about 2 billion instead of the usual 1 billion. And also because we paid the debt, which Caleb spoke about that. Now, on the reserve aspect, what you see is that in the IMF latest publication, it says that, well, they estimate our import cover could reach some 6 months of import by the end of the year, which in itself is good for the country. Now, we saw how the BOG sold about 3.9 billion of its gold, and we all know how we use that to offset certain things. But the IMF is saying that, well, if you look at the plans we have for the gun wrap, which is targeting about 15 months of import cover by 2028, it means that there's a lot to be done where we are at the moment, 6 months, relative to where we want to be 15 months, right? With a gun wrap, you need close about $9 billion each year to be able to reach 15 months of import cover. And if you look at the pressure which is consistently coming on the BOG to come into the market to intervene, it tells you how possibly it might be difficult to get that 15 months of import cover by the end of 2028, because the BOG has to intervene. That same BOG has to make forex available to build the reserve. That is why gold board has become a strategic piece in this whole chess game, which we'll be speaking about that on Big Analysis.
Particularly the cost
of
doing that.
Yeah, but on that, you could see that although, well, we'll be focusing on that close about 13 billion that we've injected into the market, you will see that without that, we could have reached about 20 cedis to a liter of diesel faster than we are at the moment. So you may want to look at just the nominal figure, but in terms of its benefits to the economy, we all see it at the pumps, because just look at what the Russia-Ukraine war did to the pump prices. And imagine 20% of the global crude or what we consume passing through a certain strait that has become a subject of continuous battle for more than 100 days, and we've still been able to survive up to this point, with government coming in with some interventions here and there. It tells you that, but for the health of the cedi, which usually or significantly came from the interventions we are seeing, we could have sold diesel around 22 cedis, petrol around 17 or 18 cedis. So you may want to look at it from different angles, but I think that you may talk about the big number of intervention of 13 billion US dollars, but the benefit to the economy has been very enormous.
Yeah, I mean, brilliant. Ziblim, this is a good point, because the Bank of Ghana is a policy institution. It has a certain responsibility to the people of Ghana. The Bank of Ghana is not a commercial bank. It is not out there specifically looking for profit, although its balance, its books are of very significant concern. I mean, flowing from the point Kofi has just made about the impact of this intermediation by the Bank of Ghana and how it has helped stabilize the economy a little bit, and then talking about gun wrap and the plan to achieve about 15 months of import cover by 2028. If they are not to get there, because they would have to every now and then intervene, what would you think about that? Should the Bank of Ghana be very concerned about necessarily hitting the target in 2028, or perhaps thinking, listen, even if we can do 15 months of import cover by the set date, and we can do 10 or 12, that will still be very high for a country that has always had import cover hovering around 3 or 4 or 5. At some point, Dr. Isiama and his fellow governors and policymakers will be thinking, listen, if you can get 10 or 11 or 12 and we can't hit 15, but we'll be injecting into the economy and stabilizing things, that would be good.
Yeah, we could make a very important point because, and if you listen to the language from the governor when it comes to some of the policy or the policy choice of the Ghana or the Ghana Accelerated Reserve position, you can really tell from the BOG's perspective that they are looking at the cost of the program. Now, Ghana is going to be very expensive. And now we've had indication that now taken away from the BOG, and now with the Ministry of Finance, we're going to be controlling things from the Ghana side. And if you really monitor the space, we've been mentioning this for a long time that Ghana is very expensive for the BOG's balance sheets because this also means that the BOG needs to actively keeping dollars or hoarding them in a sense, like you rightly mentioned, instead of putting it in the market. So once you also keep the dollars, you're also starving the market players from some needed forex for their business operations and all of that. So I think for the GARAP is very ambitious, and if you read the IMF latest policy document, they say the government should not do the 2028 fixing mountain possible. They do a very blank. They said the government should not do that, and they say that it's going to be very costly on the government and the BOG's balance sheets. But then again, we know that there's a policy choice by the government, so now it has been transferred from the BOG to the Ministry of Finance, and they are going to be spearheading that. Now, even with that, there's also some risk involved because once the Ministry of Finance is actively increasing their reserve position to the BOG, it means that they are starving funds from other sectors of the economy that would have otherwise been used for capital expenditure or payments to some social, some social payment like the leave payments and all of that. So it's a very ambitious policy, and I don't think the BOG is, so focused on hitting that 15-month import cover mark because again, this is mainly on the back of gold prices. Yeah. Within the next few years, we don't know how good are going to be. Yeah. So if the BOG is actively, burning through its muscle to show up the reserve positions up to 50 months, it just means that starving other aspects of the economy. And we need to get this very straight that the economy needs to thrive aside gold prices. So now the focus should be on letting the other aspects of the economy grow so that when gold prices eventually fall, and they will fall eventually, we will see this very, very soon. When gold prices eventually fall, Ghana's position is not less exposed, which you can understand why the BOG and the Ministry of Finance want to get that 50-month import cover as a buffer. But then again, it's going to be very expensive. It means in the short term, market players are going to be starved of some funds. So it depends really on the balance. And then according to the IMF, that 50-month import cover goal is really ambitious, and the government should not really focus on that too much. So I think we really have the verdict now. And the BOG, again, if you listen to the governor, I mentioned this earlier, listen to the governor's language and choice of words, you can really tell that he was not really 100% on board with the 50-month import cover because he mentioned that it was heavy on the BOG's balance sheet. So I think so far, the BOG has enough firepower to weather this storm. The BOG can intervene as and when. There's really no problem there. The BOG has enough dollars. Gold prices are still doing very well. Gold board had a problem with exports because of the markets involved, Dubai and India, but then they managed to, circumvent that, and now they are exporting gold again, which means more forex is coming to the Ghanaian economy. So I think in the short term, we shouldn't really see any problems. Hopefully, the conflicts in the Middle East will also end very shortly and might get back to the status quo. So I think for Ghana, it's very ambitious, and then if we're going to take the IMF's assessments by its face value, the government should, rethink the policy again. Maybe it was a populist policy, or the intention is very good because you need enough buffers to weather any other storm in the future. But then again, the short term, it just means that you're starving the economy of other aspects of the economy of marginal funds.
Brilliant. This is a good point to end this particular segment having to do with the Bank of Ghana's plan to inject about $1 billion into the economy to sort of give the cedi some sort of a break. It's achieved some relative, it's not really an achievement, it suffered some relative depreciation over the last few weeks, and the Bank of Ghana is coming in as they've been doing. They call it the intermediation. So that is it with the Bank of Ghana and what exactly they are doing in this very, very important aspect of the economy. We're going to take a quick break. When we come back, there's another big aspect related to this particular issue of maintaining the stability. At what cost? In fact, at some point, we thought the cost was very high, and now it appears the cost is very high. We'll be joined by George Afi as well. But let's take this quick break, and when we come back, we'll zoom into that part of the conversation.
However, the local unit... So this strategy will lead.
Oh no, not again.
Say, relax. The generator will come on now.
The generator is not working.
Why stress yourself when the experts are just one tap away? Introducing Left Power, the smart emergency support app from Left Signature Limited. With Left Power, certified engineers respond fast, anytime, anywhere. No delays, no stories.
Hello, sir. This is Left Signature Limited. The request has been received and our engineers are already on their way. Please relax. We've got you covered.
This is professional.
Every Left expert is certified, verified, and can be tracked in real time. Oh, you'll know they're coming before they even arrive. From electrical engineering and solar power systems to data center management, cloud services, smart automation, and software development, Left Signature delivers excellence, fast, reliable, and professional. Left Power.
Your solution is just one tap away.
Available on Play Store and App Store.
Hello, my name is Pamela from Customer Service. Please revalidate your account by texting your Ghana card number to 0500,000 247.
Hey, Abili, wabadim.
Madam, give me the numbers behind the ATM card. I'm calling from the head office.
An email was delivered across to our customers this morning.
Confirm if this is your bank account. 100,100,100.
Thanks for sending your bank card details.
Send the OTP now to avoid cancellation.
EcoBank will never call, email, send an SMS asking for your PIN, OTP, bank card, or Ghana card details.
Don't get played.
EcoBank, the Pan-African Bank.
Hello, please, I'm calling from Customer Experience Center.
This July, get ready for stories that will make your heart race. From love and passion to secrets and lies that can ruin everything. Catch the sizzling episodes of Sins and Roses at 4 p.m., Domenica Monteiro at 5 p.m., Be My Sunshine at 6 p.m., and Avenida Brazil at 7 p.m. Central African Time. Only on Novelas Plus, Channel 133 on DSTV.
Welcome back to Beyond the Numbers, and we've been discussing the Bank of Ghana's planned $1 billion intervention in the forex market and what it means for the exchange rate stability. But behind these interventions is a bigger conversation about the tools that the central bank is using to manage the market and build reserves. One of those tools is the domestic gold purchase program, which has played such a role in helping the Bank of Ghana accumulate reserves and provide foreign exchange support to the private sector. However, that program has also come with significant costs, recording losses of about 22 billion cedis last year. So what explained these losses? Was the cost of the program justified by the benefits it delivered? And what does this mean for the future of Ghana's forex management strategy? I still have you in studio, Akufo-Addo, to help us break all of this down and analyze all these angles. But also we'll be joined by Joy Business Editor George Wiafe, who is here, as well as Caleb Ziblim Shifo is still on Zoom to help us deal with this. So this is really the big analysis if you look at all that is happening. 22 billion, that is the cost of having the kind of cedi exchange rate we currently have. That is 1.5% of GDP. There are those who would say that is very high, and there are those who still say, listen, that is the cost of ensuring that the economy is running smoothly. So 6% of GDP, that is the Bank of Ghana's negative equity position last year. Again, there are those who still talk about how a negative equity of 6.7% of GDP is still something to be very worried about. But one of the cogs in this very important conversation is this man, Sami Jemfi, and the Gold Board. In fact, Bryce Simmons called them Gold Bossu. So they have been playing a certain role in ensuring that the Bank of Ghana is able to buy and sell some of the gold, and they've been helping with that intermediation and that. And so there's a couple of analysis in terms of some transfers that have been made and all of that, which is raising concerns for some people about the cost. And the latest IMF report makes for very interesting reading. Before we get into those details, George, you want to make some points about what the Bank of Ghana is doing with the $1 billion
I think that just a little bit of, again, add up to what earlier my colleagues have said is that why is the Bank of Ghana doing so? And basically has to do with the fact that how do you manage liquidity in the market and also meet demand pressures? I mean, if you look at and these are dollars that they are selling to the commercial bank. It's not an injection of just throwing into the market. And they insist that they want to see this measure as an intermediation. And if you engage from the market in terms of what is going to happen this month or what happened last month, the Bank of Ghana again is insisting that in the month of July, there wasn't any intervention in this program. But again, if you track back from January to date, there was some semblance of intervention and there was that semblance of intermediation under this program. So the Bank of Ghana is saying that, see, what is driving this is the energy demands. The fact that crude oil prices were going up and you realize that all these BDCs and even the generating companies needed more dollars to finance these imports. That is what actually fueled the demand. Going forward, again, we are seeing crude oil prices drop to around 70-something or something. So the forecast is showing that going forward, things are going to normalize. And if things normalize, that could again impact on the dollar demand from the bulk oil distributors, the transporters, and even the power generation company. That's why if you look at the June data, it was almost about 2 billion, a mix of the intermediation and the intervention. But the Bank of Ghana believes that going forward, if the crude situation should normalize, the Strait of Hormuz should open, the dollar demand will be okay a little bit. So do I need to again pushing more? Don't forget that the Bank of Ghana, when they had a meeting with the president, we got that there was even a band they were working with. And we've still not gone beyond that 12 cedi band. So that is why, fine. So that is why you see that they are still not trying to push in more dollars, because you should watch your reserves. The reserves are around 12 billion or a little over 12 billion, and you've seen what happened just in 2 months. So you want to watch your reserves and also see that what are the markets saying and how you should be tactical with your intermediation and intervention.
Right. That's very interesting. So that is the big analysis that we are going to go into, the cost. Kofi, I'm reading the IMF report, and it said something that made for very interesting reading, really fascinating about the cost. Paragraph 83 on page 37, it says, under the GGPP, the Bank of Ghana incurred losses equivalent to 15.3% of gross gold purchases. Of all the gold we are buying, gross, we are making a loss of up to 15.3%. There are those who say that the losses has actually been way higher than we knew previously. When you look at these numbers, what do you make of it?
Well, so I think that the first thing that we all focused on when the Bank of Ghana released their financials was the net loss. Yes. It was about 9 billion Ghana cedis. So everybody was like, oh, the loss was not as big. But if you look at it on the gross level, you see how significant the loss was and how that plays an enormous burden on the Bank of Ghana's, financials on their balance sheet, right? And as a result of this 22 billion we are talking about, it nearly caused us not to pass our final review of the IMF program. Why? Because there was some ceiling in terms of how much the central bank could finance, the BOG. They went beyond that because of the negative equity position. The central bank had to pump in about 5 billion, Ghana cedis in terms of, bonds for the Bank of Ghana to be in a good position. So what you're seeing on the smart wall has a lot of complications. And in fact, you're talking about we purchasing some 144 billion worth of gold in 2025, and 15% of that were significant losses. Remember, we complained about the gold for oil program because that was making, I think, about 2 billion loss or so. Yeah. But this particular one, look at the loss, 22 billion. Yeah. And they'd also say that don't just look at the loss. This is a strategic, policy in place by the Bank of Ghana, or being put together by the Bank of Ghana, because if you look at how much we were spending in terms of swap deals, and the cost of Eurobond credits, that alone, the interest we're paying every year, add the swap deals and interest on Eurobond, you will see that we were paying higher than what we are even paying for the loss associated with the gold purchase program. But there was one thing that the IMF said in that same paragraph that you read that is very, very important, and that was that if you look at this 22 billion Ghana cedis, it made the financials of the Bank of Ghana very, very unsustainable. We know the bank is dealing with a negative equity of more than 90 billion, Ghana cedis. Yeah. Just imagine that enormous figure, close about $8.5 billion that we had to recover. And there were talks about how we're even going to recapitalize the central bank. The government had a different position, but now you could see they are in the boat to help with the recapitalization. So this figure you see has a lot of implications on the OMO operations of the Bank of Ghana and so many other things. And so it nearly caused us not to pass the final program, but we had to, seek for a waiver before that program was passed. And so the sources in terms of who is actually involved in this whole equation, you cannot take out the gold board, right? Because the gold board, these were losses that could have easily gone to the gold board. And I'll come to the operations of gold board very soon, because you see that in 2025, the model of the gold board that we saw is not the original blueprint, what we wanted to really, implement, right? Where the gold board was supposed to get some seed funds and revolving funds from the government and do business with that. But because that money didn't come in, the Bank of Ghana had to step in and incur this loss. Now that the gold board is moving to trade on its own books, are we likely to see some of these huge losses? And if it comes, is it going to be like any of the SOEs like Cocoa Board or ECG?
Brilliant. I'll come to George, but Ziblim, there are those who make a lot of fuss about cost and loss. I mean, this is big. You look at 15.3%. But there are those who still say, listen, that is major, but the Central Bank of Ghana is still liquid, is still able to act, continue to do it. But there's a lot of caution about managing to lower this cost. And in fact, they said there are further efforts required to reduce the cost to about 5% of the mandated memorandum of understanding that we know have been signed between the Bank of Ghana and the gold board in terms of how to manage this trade. Where do you stand on this? Cost, losses, but where do you strike a very fine balance so that we can be doing something great with our resources? Caleb, can you unmute? Brilliant. Now I'll go back to Caleb. Then let me throw that to George.
I think it's very interesting. I think that the good thing is that we went for an IMF program, and that is what some of these things have exposed. It wasn't only about the gold board thing that we have to get a waiver from this program before we had to pass. There were issues about recapitalizing two banks, and now they put the names of the banks out, so we can talk about it. UMB and Prudential. So that is the good thing about having a fund program, because it brings out a lot of these things. In the past, you have to know someone, you have to go and beg for someone. Getting access to official data was a big problem. But for me, I think that it raises the question, that is why the fund had put pressure on the Bank of Ghana to cease its financing. And that's why going forward, that is not going to happen again in terms of BOG itself kind of stepping in to support gold board operation. What has brought about this? I think that we got the understanding that BOG is buying the gold at a certain price, and the selling price is also different. So that differential thing is causing this loss, not because BOG is just dashing money away. But again, it calls for a more review of this whole structure. Because the IMF is saying that under the program, the argument is that the Bank of Ghana is your last resort. So when everything should get bad in this economy, you all turn to the Bank of Ghana. What can be done to protect the Bank of Ghana, insulate the Bank of Ghana? There's a bit in the document they talk about confidence in the Bank of Ghana's policy, balance sheet, sorry. So the IMF is worried that, do everything to insulate the Bank of Ghana. And that is why they are worried about some of these things, that something, okay, it's a good policy, give it to GOG, your government of Ghana, and leave the Bank of Ghana. Another thing that I think we've seen some of these challenges coming up is that you had a situation where the gold board was performing kind of a similar function to what the Bank of Ghana was doing, buying gold, auctioning gold. Now we understand that there's a likelihood they also be doing an auction as well. So I think that also brought some problem as well. And that is why we saw this exposure. But for me, the good thing is that going forward, the governor himself has announced that going forward, they've stopped that. Government of Ghana is now going to finance that. Again, the good thing is that gold prices are doing well. But at some point, what will happen if there's a blip?
That's a big risk.
And I remember we interviewed Tio Champion in the studio here, and when he was arguing that it is not good. But if you read through the staff report, the IMF is insisting that our recent expansion, our recent robust...
a significant part is gold, right?
Is gold. So what are we doing now to, again, protect that, but also try to take steps to diversify the economy. So if tomorrow we wake up and gold is doing $2,000, what happened? But again, the Bank of Ghana is arguing that if you look at the whole budget for the year, they were not estimating gold to reach 5,000.
You're getting the windfall.
So there's a windfall. What are we doing with this windfall? Are we again selling that windfall to the market to raise extra money, or we are putting a fraction of that into our reserves? And that's what we are hearing. The fraction is going into our reserve build-up, whilst the excess is auctioned onto the market. So it's a very difficult thing, but again, that is why they are being put there to manage the space and make sure that they get it right with their policy measures and their interventions.
Yeah, Caleb, you're back. I was asking you about the cost and the losses debate. I mean, Kofi and George have really put this in proper perspective, the Bank of Ghana doing this. And we know now that there's an MOU between the Bank of Ghana and Gold Board for Gold Board to now focus on doing this gold purchasing program really well. But the costs and losses, different prisms through which you can find this very staggering number that the IMF has put out, equivalent 15% of gross gold purchases. That is the losses. Where do you stand on that?
It's very significant, because for you to lose about 22 billion in your gross loss, and then the entire trading year, this means that some aspects of the program need some tweaking. And if you read through the IMF's engagement with the government and also the new language from the Ministry of Finance and also from the Bank of Ghana, you can tell that they are decided to take these things on by the horn and to address some of the issues. When the story broke in 2025, at the end of 2025, what we heard that the BOG had made a loss of $214 million at the end of September because of its engagement with the Gold Board. There was some significant pushback. We didn't really understand, because if you look at the mechanism of Gold Board, it's very clear that they will make significant losses. Because once you buy from miners at the spot price and you export, and you have to get your discounts on it because you don't have the refined gold traceability and some of the insurance costs and all of that. It's just a no-brainer that you're going to make significant losses. Again, because of the exchange rate differential that was being used, where BOG supplied the dollars at the BOG rates, but then Gold Board supplied the dollars to the aggregators and their off-takers at the foreign exchange rates. That alone is a mismatch that needs some reconciliation. But I think for the loss side of things, it's pretty clear now. Last year there was some significant pushback that there's a cost, there's no loss. But then for 22 billion Ghana cedis in just a year, that's a significant loss that needs to be addressed. And now we've seen some significant steps being taken in that regard. First, the BOG is no longer going to be involved in this. The BOG has washed their hands off the domestic gold purchase program. Right now, Gold Board is going to take lead on this. Again, the Ministry of Finance is now going to finance the gold activities, and if there's any loss, it's going to be borne by the Finance Ministry, which is why we now see a budget line item of $5 billion in the media budget review for Gold Board and also for the Ghana project. But then again, this also tells you that the loss is going to be borne by citizens now. So if there's any issue, or if some of the missteps that took place in 2025 are not addressed, this is going to be borne by the taxpayer. We are going to feel the hits heavily because it's now being financed by the budgets. And these are funds that ordinarily would have gone to, say, CAPEX, building schools or supporting some social transfers and all of that, will now have to be supporting Gold Board or supporting the gold sector through Gold Board and all of that. So I think it's still early days to see how the governments are now going to change things. The cost was about 15% of total gold purchase in 2025. That then dropped to about 14%. Now, the new MOU signed between the Ministry of Finance, Gold Board, and the BOG is that they want to reduce that loss to about 5%. Now, that's a significant reduction. But then to reduce it to 5%, it just means that some drastic measures needs to be taken within Gold Board and the entire architecture around the gold purchasing. And I'm strongly, I think we've spoken about it so many times, where the premium or the spot price that's being given to small-scale miners is not sustainable at all. You can do all the reductions elsewhere as you would do, but then once you don't address that issue of, not giving small-scale miners the spot price, because the gold you are going to sell is not going to be bought at spot price. So once you're paying miners at spot price for it, it just means that there's a loss somewhere. Previously, the BOG were going to bear the costs, as you call it, or the loss of this, but now it's going to be borne directly by the taxpayers, which is why we all need to be concerned about this. But then again, you can also take away the fact that this also helped significantly, and it brought in some steady supply of forex, which also fed into the inflation, and so it's really a significant part of the new government's approach to solving the economic crisis that happened in 2022. But then again, you have to be prudent with some of these things, which is why if you read the document the IMF put out recently, you can tell that this transfer from gold books to the finance ministry was one of the major hurdles that needed to happen for the IMF to take off the new the review and also push us to the PCI, the policy coordination instrument that we are now on. And George mentioned this earlier that if it wasn't for the IMF document, we wouldn't be seeing some of these things, which is why I'm very happy that we are currently under the PCI program, because with the PCI program, they're going to be releasing periodic reviews, and we are still going to have access to so much information that ordinarily wouldn't hide of. If it wasn't for the IMF document, we wouldn't hear that last year there was a 240 million loss by the end of September. We wouldn't also hear that there was 22 billion loss at the end of the entire year for the gold boss operation with the BOG. So I think it's very important. Really? And I just want to touch on something that Kofi mentioned earlier, that when the BOG released their financials, we're only hearing of the net loss, which was the 9 billion, which is what was being being discussed in the public. Because if you look at the BOG's financials, it was just 9 billion as the net loss. But then aside the financial statement, the BOG also released that a package that they were sharing across the industry and all of that. And if you look at that package, the BOG indicated the total gross loss of 21 billion. So it's interesting that in the packet, there was the 21 billion that was available since last year, but then the official financial statement that is usually available to everybody, there's no mention of the 21 billion, or the 22 billion, but then it was in the different packet that was being shared across the different avenues. So it's interesting. So if for someone like me and some people I'm very close, we knew about the 21 billion since last year, but then it wasn't really in the financial statement. So sometimes you can't really take
attribution,
Exactly. But then now it's from the IMF, and the IMF shows that indeed there was a 22 billion loss. So I think moving forward, we are very happy that we are still going to do with the IMF, because we are still going to have access to so much information, and also policing the entire global architecture. Because I think Kofi mentioned this earlier, if you let some of these things get out of control, you're going to end up with another SOE that is going to pull the government down in terms of debt, liabilities. And then again, we are seeing the benefits, or we are not really seeing the vulnerabilities, because gold prices are very high. When gold prices fall and your margins become razor thin, any loss is very significant. But because gold prices are very high now, we're not really feeling the impact here too. I think some significant steps needs to be taken. We've seen some commitment to the MOU, to the BOG and the government, but then again, there's still so much that needs to be done.
Kofi, which part of the kind of changes that we expect to see following that MOU sign? For instance, last year, the finance ministry released the BOG money, the gold board money, only at the end of the year. Sure. And this year, we just don't know how much so far has gone to gold board yet and all of that. What big changes does the gold board need to do with how it is buying gold? Because
before Kofi comes, just a quick one, and just a follow-up or something on Caleb said. I mean, basically, this is one of the good things why you would want to be happy about an IMF program. And it's not just about the money say, is it $3 billion? I can't even give Ghana that money. It's about those policy reforms and how the IMF program has even pushed the Bank of Ghana when it comes to information flow. That if you're going to be under this fund program, and not just this one, previous ones, you're talking about policy credibility. You need to let the market know what is happening. And that is why some of these things are coming out. Yeah. At the end of the day, you also bring some kind of force or pressure on government and actors, because you don't want this bad news to get out. What has it done to the Bank of Ghana? I think the Bank of Ghana is more robust and more strong now because of they are worried about some of these things getting out. Even government itself, the financing and all those things. So for me, look at the fund program as some of these structures or structural reforms that is taking place that goes along with the reason why people believe the economy is like the America and the London is about transparency and data. And then the market can work with it. They can even price risk. With all this data, Kofi can sit down, you can sit down and know that this is how the cedi will fare at the end of the year. If you extrapolate that every month, Bank of Ghana is doing.
You're not just relying on what the Bank of Ghana is saying.
If you're talking about policy credibility, these are some of the ingredients that contributes to policy credibility and help investor confidence and donors in your economy.
Well, Kweku, you look at this 22 billion you see on the smart wall, and it was a big bang on the Bank of Ghana's balance sheet. But it was also some good news on the balance sheet of the BOG, because in 2025, the Bank of Ghana paid BOG huge sums of money from this loss as assaying fees and other fees to the bank, to the gold board, right? So the gold board profited a lot from the fees that the Bank of Ghana paid through this domestic gold purchase program. And without that, it would have been difficult for the gold board to be in the position that they say they are on their balance sheet. Now, you asked about what must change, the significant things that must change. Already, we've seen things changing on the trading prices and the trading rules for gold board. So, for instance, last year we saw gold board trading or selling or buying the gold with a Bloomberg rate, which will fluctuate usually more than 100 times in a day, right? Because it's a live rate, it changes all the time. But now, because of the new arrangement, the fact that gold board is now going to trade on its own books, they have made arrangement to go on the LBMA, standard, where you're going to have LBMA morning price and evening price. So the forex fluctuation and the losses associated with, waiting to sell your gold as and when, exactly. All of those things will help gold boards to reduce the losses that the IMF is saying that from 15% to about 5%. Now, another thing that I also have to speak about is the fact that a significant part of the gold board is buying cannot be traced. Why? Because this is a small-scale gold, and we know the issue of galamsey, right?
IMF report talks about
exactly. So if nobody is, smuggling the gold out, then who is buying it? Definitely gold board, right? Because almost everything, according to them, we block all the loopholes, and they're now buying the gold. So once you are not able to trace the gold that you are buying, it simply means that when you are going to sell on the international market, you can't sell as premium, because you can't tell the person buying that this gold is from Asanko or from where, right? So with that, it makes it difficult for gold board to sell the gold at premium price, and that I think for me is the reason why the central bank is pushing that the large scale miners sell not 20% but about 20% of what they get to them, because with that you can trace and you can feed the local refinery we've decided to set up. Because if you are feeding the local refinery with gold board gold, or the gold that you cannot trace, it means that you should be ready to bear the losses associated with it, because you cannot trace it when you send it onto the international market to actually buy, right? We also see that the commercial banks will be coming into the space to also fund gold board, right? Because look at the financials of government, look at the fiscal position of government, look at how long it took them to release 5 billion. With the quantum of gold that gold board buys in a year, they need more than, last year they bought about 144 billion, the domestic gold purchase program. So if you're giving gold board 5 billion,
and at the end of the year,
and so just do the math, a fraction of 5 billion from, from 144 billion,
less than 1%.
Exactly, it's insignificant. So it tells you that gold board needs a lot of finance, and you ask yourself, why are they going to get the finance if the Bank of Ghana is not going to come in? Remember that the Bank of Ghana was not taking money from its own coffers to give to gold board to buy the gold. They were taking the monies from the commercial banks. And the commercial banks, if you come to them for such business, they will insist on certain things. That's why the LBMA pricing has become a big part of this whole conversation. So what has to change significantly has to be the traceability program, because we are on course to export about $25 billion worth of gold in 2026. And a big part of that is going to come from ASM gold, and a significant part of that cannot be traced. And so once you don't put in traceability programs, you can buy all the gold you want, but at the end of the day, you will be making losses.
Interesting, because that's one of the reforms that the IMF is recommending. If you look at reforms under the PCI, strengthen responsible sourcing and environmental standards for ASGM gold purchases, including requiring aggregators and traders to comply with internationally recognized responsible sourcing frameworks, enhance traceability systems to reduce smuggling and illicit financial flows, and enforcing environmental compliance. So that is big, and the IMF is talking about that. George, the finance minister, Dr. Akufo-Addo, already getting the flag from the minority that he's not spending. And this gold board thing is one of the most important things for the economy. The government itself says that all the time. So you have to put your money where your mouth is. If you say it is important for you, you have to fund it. This year, what kind of commitment and what do you want to see with the finance minister? Because now gold board is going to do this on its own balance sheet, which directly goes to the executive, the government. What should Akufo-Addo be doing together with the gold board in terms of releasing funds, in terms of making money available for gold board to be doing these things so that the Bank of Ghana can take a break?
I think there was a genesis why Bank of Ghana came in, because you look at the whole gold trading cycle. You have a situation where sometimes they have to rely on Bank of Ghana. Bank of Ghana also takes some of the gold. And that's why the Bank of Ghana thought that, okay, I can pre-finance some of these activities because at the end of the day, it comes from something. So there was a reason why Bank of Ghana came through or came to be part of this whole agreement where they can pre-finance some of these activities so that when Gold Board gets the money, they pay them back. And it's more of a cycle. They are bankers. They also do the gold trade, the auctioning and all those things. So there was a reason. When Akufo-Addo had that liquidity to be supporting Gold Board, I am worried about this whole arrangement because for the Bank of Ghana, they saw the wisdom in doing this because at the end of the day, it will not be money lost. The argument is that they're going to get the money back. Looking at the portion of the minister where he's trying to restrain spending and ensure that even when one cedi goes out, there's value for money, I'll be worried about the liquidity. The Gold Board may be facing some liquidity issues going forward because at the time that they want the money to do, I mean, listen, gold business is not child's play. You need to be very liquid to move quickly. And so if they are delaying, would Gold Board now be forced to go into the open market commercial banks to borrow? What would that also be to Gold Board? I mean, listen, I believe the Gold Board is now, everybody wants to learn to Gold Board now. But what would be the cost of that, of going onto the open market to do a pre-borrowing, if I can use that expression?
You all know what happened when the banks were borrowing to Cocoa Board, right? And now, so you had to do risk.
And also there was a company that was into commodity trading that at a point in time, listen, the banks were chasing that this business, you have to put it and all the rest and all those things. So I foresee a problem for Gold Board if the prices are not going to rally as you're seeing now, and they have to go into the open market and borrow to pre-finance some of these purchases and export, arguing that when the money comes, though, don't forget that during this Strait of Hormuz closure, they had issues in the export of this gold, and later they had to find a different route to export to the Asian market. During this gap, if, for instance, our Bank of Ghana is no longer financing them, who will step in, at what cost, and what will be the impact of this cost on their operations? Also, we understand that there has been an accounting firm that has helped them with a very fantastic, a great modeling to help with their operations. But how proof would that model be in these times when now they are very, very independent and they have to compete on the market just like you and I to try and get funding to finance their operations?
Yeah, quickly, Caleb, in a minute, where do we go from here? What are your big ticket items when it comes to this very important subject of Gold Board and sustainability? A minute.
So I think we just need to focus more on understanding the liquidity that's going to go to Gold Board, where the money going to come from. The first thing we need to understand. Again, we know that. The commercial banks were also funding Gold Board through the BOG. But then again, the BOG was also putting money. You can call it printing money to give Gold Board to buy the gold again. So funding for this new model is going to be very important.
Brilliant. Kofi, just a minute.
My biggest worry is the impact on the banking sector because at the moment, the government is sucking from the banking sector. Cocoa Board is also sucking from that same pool.
Now Gold Board, a lot of money.
So
what happened to the private sector trying to get funds?
So my biggest concern is the impact on the banking sector if we are going, and a big push. I mean, we've seen some of the contractors also taking money from the banks to do big push projects and all of that. So it's the banking sector for me because already we've done a lot to reduce non-performing loan ratios to the level they are at the moment, and we've seen how a significant part of the non-performing ratios have been from the government side or the public side. So it is my biggest worry that if Gold Board should go to sack from the banking pool, what will be the impact?
This has been beyond the numbers. We've been looking at the Bank of Ghana decision to put in about $1 billion Ghana cedi in terms of the forex intermediation into the economy. We've also been looking at the gold trading of Gold Board at some point, the Bank of Ghana helping it. and how exactly we can have a very sustainable model. I've had Isaac Ofeje, head of our research desk. We've had George Rafi in here. I've also been here together with Caleb, and we've been breaking down this. As always, we'll be back again on Friday to bring you more on whatever is happening on the market. We'll see you again very soon.
All right.
This week on the Career Trail.
I applied to KN University, but I wasn't picked. I went to teach